So we got numbers from Apple. Revenue, $81.8 billion. The size of this company is incredible. In its latest quarter, down 1.4% year on year, but actually slightly ahead of expectations. Let's bring in Tom Forte, Managing Director and Senior Research Analyst at D.A Davidson. Tom, thanks very much for giving us the time. Anything interesting jumping out for you with these Apple numbers?
Yeah, so thank you for having me. If you look at the performance, all of the hardware products were down. iPhone sales reported a decline in revenue. They had a decline in laptops. They had a decline in tablets. Now, the one saving grace was that services revenue grew at a high single-digit rate, and that kind of, I guess, enabled Apple to slightly exceed expectations for the June quarter. So thank goodness for their services effort.
That's interesting, isn't it? So services now about a quarter of their total revenue base, north of $20 billion. And what kind of services are they? I'm so out of date, I think it's iTunes. We don't even call it iTunes anymore, but is it things like, what sort of thing?
You're very close with iTunes, only they would call it Apple Music now.
Right.
So you think about iCloud, Apple Music, Apple Fitness, Apple News, things of that nature, Apple Pay. I like your iTunes reference, though, but yes. Basically, this has been the key in the last couple of years to Apple's shares getting a higher multiple because the margin on the services revenue is superior to the hardware revenue. And then as it looks like for the June quarter, the services revenue is what enabled them to slightly exceed expectations.
I know I'll be talking about MySpace next at this rate. It is incredible, though, that a quarter of their business is now services. And I presume that implicitly the margins on services are going to be better.
They are better. And I do think that as Apple continues to lean into services, at some point in time, and I guess the cable reference might be dated, but we'll essentially just have an Apple subscription. And we'll pay Apple a couple $100 a month. We'll get the newest iPhone, and we'll get a bunch of these services, and then we won't care that we're essentially paying $2,000 for that iPhone. We're just thinking of it as a monthly bill. I think that's the direction that Apple's headed.
Because do they see maturity of the cell phone as a product? I mean, cell phones have got so much better. It's obviously been a miracle over the past decade and more how powerful they are. But are we reaching the marginal benefit curve? Is it beginning to flatten off?
So the product is certainly mature. The question is, to what extent can they enter emerging markets? To what extent can they get much higher market share in India, as an example? But yes, the smartphone, that's a mature product. They've gotten incremental juice from the carriers, once again, subsidizing the devices because they want us all on their 5G networks where they invested billions of dollars. But yeah, the iPhone's a mature product, which brings us to the question, how successful will Vision Pro, the augmented reality, virtual reality product be when they launch it at the start of the next calendar year? And we're a little, cautious on that. Concerned, for example, that consumers won't want to spend $3,500 US for a virtual augmented reality headset.
Just fine, we've only got less than a minute. I am a fan of shows like Slow Horses on Apple TV and Severance, the science fiction show. Are they going to go on spending on entertainment? I mean, does it give them a return?
The answer is they are. On a near-term basis, though, I think even Apple's affected by the Writers and Screen Actors Guild strikes.
Okay.
The good news is that they have a fair amount of live sports content, which insulates them a little from these strikes. But some of your favorite shows may take longer for the next seasons to come out as a result.